the College Mom here. Today we're going to talk about student loans. So if you have watched the news at all lately, you will find out that there is a student loan debt crisis and supposedly $1.5 trillion in student loans out there right now. So we're going to talk about the different types of loans. One are going to be federal loans, and those loans are going to be serviced by the Department of Education. And then the second type are going to be private lender loans, and those loans are going to be serviced by either a bank or a financial institution. So the two different types of federal loans are going to be student loans, which really they're all kind of student loans because they all help the student go to college, but they're going to be considered student loans, and then Parent Plus loans. As far as these actual student loans, where the loan actually belongs to the student, there is the Stafford Loan. The Stafford Loan is by far the biggest loan that there is. Now, one of the reasons the Stafford Loan is so popular is because it is very easy to qualify for. So the way you qualify for it is to fill out the FAFSA. And as long as the student is not a felon and they're a U.S. citizen and their EFC is lower than their cost of attendance, which pretty much everybody who would watch this video is probably going to be in that situation, they're going to qualify for some of a Stafford Loan. To qualify for the Stafford Loan is to fill out the FAFSA. Filling out the FAFSA is going to let a student know how much they qualify for, and then if it's going to be subsidized or unsubsidized, or I mean, it's actually not all going to be subsidized, but some of it could be subsidized. Subsidized being the federal government is going to pay that interest on the loan while they're in school. Unsubsidized being this interest is going to be accruing while the student is in school. Now, these loans are going to be the most popular because they're going to have the lowest interest rate for any college loan. It's for 2020, 2021, it's 4.53. They're also going to have the lowest origination fee, which is going to be 1.069. Now, the origination fee is going to be how much is going to be charged by the loan servicer at the beginning of the loan. So say a student took out $5,500, they're going to charge that origination fee off the top of the loan before it even gets dispersed, and then they're going to put the rest of the money into the student account. So for a Stafford loan, that really is not that big of a number. Say $5,500, it might be like $50 or something that they're going to take out before they credit that to the student's account. But when you're getting into like a Parent Plus loan and you have a large origination fee, you have to realize that it's going to be a little bit less of what the student's actually going to get into their account. We can look at this chart and see what the limits are for the federal Stafford loan for 2020. And it's going to be based on credit hours or what they have as freshman, sophomore, junior, and senior. The freshman for a dependent student is going to be $5,500, and then it has only $3,500 of that can be subsidized. That's if they're a dependent student. And then now if they're an independent student or the parents got denied that Parent Plus loan and they go ask for more of a Stafford loan, they can get up to $9,500. But on all of these, the same amount is going to be the amount of subsidized, whether it's dependent or independent student. And then for a sophomore, it's going to be $6,500. No more than $4,500 can be subsidized. If they're independent student, it's $10,500. For juniors and seniors, it's going to be $7,500, with not more being $5,500 subsidized. Or if they are an independent student or the parent was denied a Parent Plus loan, it's going to be $12,500. Now, all of these student loans or college loans through the federal government are going to be based on a 10-year repayment plan. And for these loans, the student loans, the Perkins and the Stafford loan, it's expected that the student starts paying that back 6 months after they graduate. These loans also have the most lenient repayment options. So if they get out of school and they find out they can't make the payment and they're just too strained financially, there are options that they can put into that they make it very easy to defer or forbear the loan. And then if it's going to be a deferment, a lot of times they can get the interest paid during that period, so that interest won't keep accumulating while they're not making that payment. If it's a forbearance, then the interest is still going to be accruing. Then there's also an income-based repayment plan, which is going to be based on whatever the student's income, so they get out of school and their income and all of their bills just don't match what their student loan payment is, and so that they will recalculate that and give them a lower payment based on that. But keep in mind, if they do this and say they're payment was supposed to be $500, and they say, well, you'd only have to pay $350. That's good, but you're going to be out of that 10-year range of being able to pay it back because you're only paying a certain amount. So that interest is going to keep building, and it's going to extend to the life of the loan. Now, these loans are also going to have some loan forgiveness options, which have very kind of strict parameters, but they are out there. One is going to be public service forgiveness if they work in certain occupations, say police, firefighters. Certain occupations can get loan forgiveness. There's a teacher forgiveness program. If someone is a teacher and they agree to teach in a certain, say, low income or underprivileged area, they might qualify for teacher forgiveness. If the school closes before the student is able to actually get the certificate or finish the program, they might be able to get the loan forgiven through that. Then there's also disability. Say the student becomes disabled, they might be able to get a loan forgiven for that. And then there's death, which is very sad to even think about, but they are forgiven if that happens. And then possibly bankruptcy. But for bankruptcy, right now it's not automatically included. If someone files for bankruptcy, it's not automatically included that your loan is going to be forgiven. Next type of federal loan is going to be a Parent Plus loan. When I first saw Parent Plus on a financial aid report, I was like, oh, cool, Parent Plus loan, like it was a big plus. But a Parent Plus loan is just the loan that a parent is going to take out, and it's going to be their loan. So like the Stafford loan is this student's loan. That's their responsibility. They're the ones who are going to have it under their social, and it's going to stay with them forever. And then a Parent Plus loan is going to be taken out by the parent, and it's going to stay with them. So even once the student graduates, the parent doesn't get to then say, oh, you graduated, here, this is your loan. It's going to stay the parent's loan. Now, a couple things about a Parent Plus loan. One, it's going to be determined when you fill out the FAFSA and you get that financial aid award letter, and how much of a Parent Plus loan you can actually try to qualify for. And then again, you have to qualify. It's not going to be so much based on a credit score like a regular loan would be, but it is going to be based on credit worthiness, which means like the parent can't have had charged off accounts. They can't have something that's more than 90 days delinquent that's over like $2,085. So they have to have fairly decent credit, but it's not like a credit score and they're going to do this debt to income ratio to see if they qualify. Now, if for some reason the parent does not qualify, the student does have the option to try and get another relative to qualify, or they can go to the financial aid office and they can ask them to qualify them for that Stafford loan at an independent student level. So when they do the financial aid package, they're going to be giving out this Stafford loan based on a dependent status for the student. Independent student level for the Stafford loan is going to have a higher level of what they will lend you than the dependent student. So they can go and say, my parent got denied a Parent Plus loan. Can I get requalified for the Stafford loan at a independent student level? So usually that's going to be like $4,000 more that they could get out in a Stafford loan. Now, like I said, they could have a relative apply and see if they can get the Parent Plus loan, but if they only need like whatever the extra is, say they only need $4,000, it actually makes more sense to go and get them to requalify them as an independent student, because the interest rate and the loan origination fee is actually going to be lower on that Stafford loan than the Parent Plus loan. These loans are also going to have a much higher interest rate, which for 2020 2021 is going to be 7.08%, and it's going to have a much higher origination fee, which is going to be 4.23%. If you're looking at these Parent Plus loans, keep in mind that those are they are set interest rates, so they're not going to change. But if you have excellent credit, you can also look into a private lender loan, because sometimes maybe whatever deal they have might be better than a Parent Plus loan. Another maybe good, maybe not so good thing about Parent Plus loans is there is no limit on how much you can borrow. So say you have a student and they're going to go to a private school that's like $65,000, and they're going to get $20,000 in some kind of merit aid, and then they're going to get their unsubsidized loan, so they're still going to owe say $45,000, and they qualify for a Parent Plus loan. They will let them borrow all of that difference between what there is after gift aid to the final cost of attendance, they will let you borrow in a Parent Plus loan. So yes, these loans are good in that I guess you wouldn't have to worry about your student have enough money to pay for college, but you have to keep in mind that if you're borrowing off a Parent Plus loan, this is a 10-year loan and it's going to be accumulating interest that whole time. Another thing about Parent Plus loans is it's expected that the parents start paying on this loan as soon as that loan is taken out. So it's different from the Stafford loan where they're really kind of expecting you to start paying it back 6 months after. With a Parent Plus loan, it's kind of expected that you start paying when the loan is taken out. Now there is an option on there that the parent can ask to defer that until 6 months after the student gets out of school. But then of course all that interest is going to be building up until they start paying it back 6 months after they get out of school. This loan does belong to the parent when the parent fills out the application, which they're going to have to fill out the FAFSA and then they're going to have to fill out the Parent Plus application. It's going to ask you when you want the payments to start, and then also it's going to ask you how you want the funds distributed. So if there's extra money, say the student has this money in their financial aid account or their account, they're going to pay the tuition and the fees, depends on where they're going to live, if they're going to pay room and board, and a lot of times the student's going to get a refund out of that. The parent can say, I want the refund sent to me, or I want the refund sent to my students. Loans there are just going to be private lender loans, just a regular bank or financial institution. There's lots of them out there. There's Wells Fargo, there's Discover, there's just go in student loan, and you'll come up with this whole thing. And the thing about these private lender loans is they're going to obviously be based on credit. Usually it's going to be the parent's loan because students aren't going to have gotten enough credit when they're in college. And if it is a student loan, then they're probably going to need a cosigner, or a lot of times it's going to be the student loan and the parent is going to be the cosigner. These loans are going to vary all over the place with how much the origination fee is and how much the interest is and the term of the loan. Most of them do give you till 6 months after the student is in school. Some of them, though, if it's a parent loan, I want you to be paying it back right away. So you really have to look at these and compare and get the best deal that you can. And just like any other loan, it's going to be based on credit. They might take into debt to income ratios, and these are going to be your private lending loans. So when you get these financial aid packages, a lot of times if you don't have enough in your gift aid and then your Stafford, they'll stick that Parent Plus loan at the end. You can look at that Parent Plus loan. You don't have to take that out, and it's not automatic. So make sure if you're doing a Parent Plus loan and you're like, okay, we're going to accept, you have to make sure that you go in and you fill out that application for the Parent Plus loan, or else nothing's going to happen. You have to get approved for it before this is going to be dispersed to your student. And then you'll see if you qualify, then they'll go ahead and do it. If you don't qualify, like I said, then you're going to have to go and get that independent student status if the student needs more money. But you don't have to take out these Parent Plus loans, and you don't have to use a Parent Plus loan to fill in that gap. You could use a private lending loan. Maybe you could get money some other way. Now, if you are in this little level, and a lot of people are, where your student is not in a place where they're going to be qualified for this financially based aid, but then you don't make enough to cover all of these costs, so you kind of have to take out a loan. Of course, a lot of people, you just have to take out a loan. If you got to take out a loan, take out the Stafford loan. When you get into having to take out these Parent Plus loans or, a private lender loans, there are other options. Of course, there's always scholarships. Everybody knows about scholarships, but there's other things that you can do. So I'm going to talk about that in the next video. So give me a thumbs up and have people subscribe, and I will see you next time. Bye.